is why are more and more people going to real estate debt funds to get their transactions funded? Well, there's really three main reasons. Number one is speed. As we all know, to take advantage of opportunities, you need to be able to close quickly. And typically, private debt funds can move much quicker than conventional lenders. Number two is flexibility. Typically, private debt funds can be much more flexible in the types of loans that they can offer. They have a larger credit box. Now, not all debt funds are structured the same. Some, prefer smaller loans, some prefer larger loans, location, property types. There's all different types of debt funds, but normally all of these debt funds have a much bigger credit box and can be much more flexible in their lending options and lending programs. And then number three comes down to documentation. Typically, debt funds require much less documentation than what a conventional lender are going to require. They may or may not require credit reports. They may or may not require personal income statements or whatnot. But in general, private debt funds are much more flexible in just the way they underwrite, the speed of their close, than what they would get in a conventional bank. Now, obviously, the flip side to that is private debt funds, the cost of the capital is slightly more. Now, for many borrowers, that may be okay, especially if they're working with a smaller regional bank that are requiring deposits. Private debt funds usually don't require deposits. So those are the big reasons why, or the top three reasons why private debt funds are starting to, you see an increase in their presence within real estate finance. Thanks for listening.